Okay, welcome back. I just want to go through very quickly this time now the notes for the published accounts questions from 2006. Excuse me, if we have a look down here, it was, again, there were 5 different notes to be prepared. Tangible fixed assets was the first one, and that's not the policy note for tangible fixed assets and stock like we saw. That was the first one in 2008. That is the one where you had to do the calculations, this style here from 2008. So if we look, here's the solution for 2006, and you can see there, this is an example of one where they took the land and the buildings separately. Now, as I say, there is no need to do them separately, and I always put the land and buildings together, but we'll see how we get on with the land and buildings together, and maybe we'll look at the option of separating them at a different time. Okay. Second thing to note is that the second note they're looking for is stock. So that's like a portion of the number 1 note from 2008, where they talked about a accounting policy for tangible fixed assets and stock. And the last line of that was, stocks are valued on a first in, first out basis at the lower of cost and net realizable value. So when they want you to do a note about stock, it's just this one line. Now, this is the only time I've ever seen this coming up as a one-liner. Normally, that's tagged on to the end of the accounting policy note for our tangible fixed assets and stock, like we saw in 2008. Okay. The third one, I suppose this is the main reason I want to see this 2006 question is, it's dividends. So number 3 there we see is dividends. And excuse me, this is slightly different to the 2008 that we did earlier, because in the 2008 one there were just dividends paid. In this 2006 question there were interim dividends, and then the directors proposed paying a final dividend to both the ordinary shareholders and the preference shareholders. So in the question, if we go back to it here again, in the question, where are interim dividends? Interim dividends 29,000 it says. And down here it says the ordinary shareholders received an interim dividend of 21 and the preference shareholders received 8. So the 21 and 8 make up that 29,000 here. So you will already have this 21,000 for interim dividend for ordinary shareholders and this 8,000 for interim dividend for preference shareholders. And if you've completed the profit and loss correctly, then you will along the way have had to calculate the 32,024 and 8 for the proposed dividends in the profit and loss account, and you will already have calculated out that that 32 is made up of 24 and 8. So all this work will already have been done. So all you're doing really is writing up the stuff that you've already done. Okay. The extra little bit though is then that you have to calculate the amount of cent per share for each of these dividend payouts. And we can see again for the preference dividends, it's 8,000 and 8,000. And if we look over at the preference, where is it? Oh yeah, 160,000 10% preference shares. So 10% is what they ought to be receiving, or 10 cent per share, because each share is €1 each. So 10% is 10 cent. So they should be getting 10 cent per share for the year, which means if they're getting paid in 2 installments, an interim dividend and a final dividend, that should end up being 5 cent per share and 5 cent per share. So in total they are getting 10 cent per share. Now you can work it out that way, or you can just take the 8,000 and divide it by the number of preference shares. And in this case, again, if we go back to the question, the number of preference shares is 160,000. So if I take 8,000 divided by 160,000, I'll get my 0.05, which will stand for 5 cent per share. Okay, same goes for both of these. You take the 21,000 and divide it by the number of ordinary shares, take the 24,000 and divide by the number of ordinary shares. So again, where do I get that information? It's going to be here, 300,000 ordinary shares. Okay, so we take the 21,000 divided by 300,000 and we should get a figure of 0.07, and that'll mean that it's 7 cent per share. And if we take the 300,000 and divide by 24,000, we'll get a figure of 0.08, which is 8 cent per share, and we put it in just like that. Okay. Next one is operating profit, and that would be just like the last example we saw. Again, there's normally a mark for saying the operating profit is arrived at after charging, so over a mark, a half a mark, something like that, but some kind of marks for it. In this case, probably not, because there's two. There's probably only half, 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 half to make up this two here, but quite often there is marks for it, so put in that line every time. And again, it's depreciation, which is made up of the total depreciation for the year on both your vehicle and land and buildings, or just buildings as it were. So if we just have a quick look at it there, just so we're sure of where this comes from, 40,300. If we go back to this here, we can see that the total depreciation charge for the year was 12,300 on buildings, 28,000 on vehicles, 40,300 in total on the both of them. That's where that depreciation charge figure comes from. Okay, so that's that. Patent amortised, director's remuneration, and auditor's fees, same for all of the time. And as I say, it was just once I think I've seen an extra one where it was solicitor's fees, and we'll discuss that when we come to it. I believe it was in a pre-paper. And lastly then, the profit on the sale of property note, and that's really just a note describing exactly what happened when you sold the property, what you sold them for, how much they cost, or how much profit you made in it here, as it were. Company sold land for 80,000 greater than cost was 100,000. I mean, if you said they sold it for 180,000 as well, I would say better to be safe than sorry. Just give them as much information as possible, 2 or 3 lines, and you can't go wrong.